Hello all and welcome to presentation on place of effective management, new company tax residency rule. The final guidance were issued by the CBDT on 24th January 2017, and we're going to have a small presentation on the same. You are listening to CA.Gaurav from JGarg Economic Advisors Private Limited. In this presentation we're going to have an overview of PoEM. What are the general rules governing the determination of place of effective management, on which entities this concept PoEM would going to be applicable, inactive company vis-a-vis passive company, how to determine whether you are an active company or a passive company, what will happen in case the department is not able to identify place of effective management, what are the instructions issued to assessing officer when they are in a process of determining PoEM, and what would be the consequences in case place of effective management of a foreign company is found to be in India. So let's go to an overview of place of effective management. This is the concept which is very old. You will going to generally find this concept of place of effective management in double taxation avoidance agreements and model tax treaties. In almost all the treaties entered by India with other partner countries, we have this place of effective management as a tiebreaker rule. So which means if it is found that you are a tax resident of India and also of another country, then in that case tiebreaker rule is used, which is place of effective management. So wherever the effective management of the company lies, that country becomes the the tax resident. In that country the company becomes the tax resident. So for example, let's say a company is operating in Singapore, and it is found that the company has got place of effective management in India. In that case the company would be regarded as tax resident of India. The same provisions are there in the double taxation avoidance agreement, in almost all the double taxation avoidance agreement. Initially this PoEM was supposed to be applicable from financial year 15-16, that is the assessment year 16-17. However, because the supporting rules were not finalized, so it was deferred to financial year 16-17, assessment year 17-18 via Finance Act 2016. The department came out with the draft guidelines in December 15, and now they have released the final guidelines on determination of place of effective management. The exact name of the guidelines is Guiding Principles for Determination of Place of Effective Management of a Company. It is circular number 6 of 2017, dated 24th January 2017, issued by Central Board of Direct Taxes. So if you go to section 6, we have subsection 3, which deals with the tax residency status of a company, or in what circumstances we will say the company is a tax resident in India. So in general, if it is an Indian company, that company becomes the tax resident, and the amendment which was made in Finance Act 2015, it says now if it is a place of effective management in that year is in India. So if one company is, let's say, a foreign company, however place of effective management is in India, that company will become tax resident company in India, and all the formalities, regulation, whatever is applicable on the Indian company would going to be applicable on that foreign company as well. So explanation has been there in the subsection 3, which says, for the purpose of this clause, place of effective management means a place where key management and commercial decisions that are necessary for the conduct of business of an entity as a whole are in substance made. So a very important thing which we need to remember while discussing the PoEM or while evaluating the PoEM is that not every decision, rather certain key management and commercial decisions which are very important, which are necessary for a conduct of a business matters. And what we need to see is not place of permanent establishment, not place of management, rather place of effective management. That is, the management should be effective, not every management, and in substance made. So it talks about in substance. So you might be implementing decisions somewhere, but the question comes where these decisions are getting taken. So where you are taking the shots. So in a country where the decisions are made, that becomes the place of effective management. This we have already discussed. So one issue is going on, and probably it may get be sorted out by the budget 2017. These final guidance which are issued on 24 January 2017, does it mean that we may see a deferment of PoEM rule instead of financial year 16-17, assessment year 17-18, we might see a deferment to another year? That is, it may be applicable from financial year 17-18, assessment year 18-19. This is a debate which is currently going on, and if you see the final guidance, it seems they are more for the assessing officer, because the assessing officer will determine where the place of effective management is. In general, department can always say that this concept was there in the DTA or is there in the DTA for long, and the guidance is available in the public domain when it the guidance is there in the OECD or in the UN. So let's see whether it will finally get deferred or not. Only budget 2017 can tell. However, currently it seems bit unlikely that the concept of PoEM or the section 6 subsection 3 may see further deferment. So let's move on to understand this concept. Few general rules that we need to remember. It talks about substance over form. So you might be having board meeting in a country, let's say X country, but what becomes important, where you are actually taking those decisions. So throughout this the determination of PoEM, we need to remember substance over form. Effective management, as I said earlier, not every managerial decision would be important. For example, you want to hire a cost accountant. The question comes, it should be effective management. So the decisions which are more important for the organization, a decision taken by a senior management guys will become more important. So if the role of shareholders, if shareholders are doing their normal shareholder role, they are participating in the shareholders meeting, taking some calls which are important for the company, let's say shutting down division, what dividend needs to pay, where we need to invest. If that is something the as per the shareholder agreement or within the normal powers of shareholders, then it will not affect the PoEM. But however, if shareholders are stepping into the shoes of management, it could lead to a problem. Also, if the shareholders agreement is talks about a lot of power, a lot of management power given to shareholders, then also it can create a problem. The determination of tax residency needs to be done each year, because each year is a separate year. So in one year you may have PoEM in India, in another year you may not have PoEM in India. So that is very important. Day-to-day routine operational decisions are not relevant. Whom to hire, whom not to hire is something which is a day-to-day routine operational expenditure. We should have laptops of company X or company Y, again a routine operational decision which does not matter. When we need to do the determination based on all relevant facts, we cannot take one fact and close the issue and say the PoEM is in India or outside India. What becomes important is every decision. So while concluding or before concluding, one needs to see all the relevant facts available. Snapshot approach not allowed. A single incident or event in India will not create a PoEM in India. So it needs to be done on the year basis. So majority, where the majority of the events are happening becomes very important. If majority of the management decisions are taken in India, then that will certainly going to trigger the PoEM risk. Now applicability, it is applicable on company. As far as foreign companies are concerned, it talks about any body corporate incorporated by or under the laws of a country outside India. It is only applicable on the body corporates. A partnership firm is not covered under this PoEM rule. So as per press release dated 24th January 2017, again it says PoEM guidelines shall not apply to companies having turnover or gross receipt rupees 50 crores or less in a financial year. It says guidelines, so there is some confusion going on whether if the turnover of a company, turnover of a foreign company is less than 50 crore, whether PoEM is applicable or not. So if you see the press release, it specifically talks about PoEM guidelines. So what will happen, if the turnover of foreign companies less than 50 crore is something which is not clear, because there is no amendment in the act. It is a press release which the wordings of the press release says PoEM guidelines. So the PoEM as a principle still remains in the act. So probably in the budget we might see some amendment, wherein the act will say, okay, if you have a turnover of less than 50 crores, you need not satisfy this PoEM criteria is not applicable on you. But then it means, if the turnover is less than 50 crore, you would only become a tax resident in India if you have if you are an Indian company. So we might see some changes in the act in section 6 subsection 3 to cover up this press release. Otherwise, if there is only this press release and no amendment in the act, then it only talks about guidelines that would, the guidelines released on 24 January would be applicable on companies having turnover more than 50 crores. So for the companies less than 50 crores, it will become an open house thing. Nobody knows what will happen. So now, in order to determine whether you have or the foreign company is having this place effective management in India or not, first thing we need to determine that whether the company is an active company or a passive company. So there are few criteria which the foreign company needs to satisfy, and all the criteria should be satisfied in order to say that the company is actually an active business company, or the company is having active business outside India. The first criteria is passive income not more than 50% of its total income. So total income that is computed as per the tax laws of that particular country, and the passive income should not be more than that 50% of the total income. So if the passive income is more than the total income, more than the 50% of the total income, then this criteria is not qualified. Let's see what passive income is. Passive income is the aggregate of income from transactions where both the purchase and sale of goods is from to its A's. The definition of A is given under section 92A. So wherein there is a transaction between two entities, three entities. Let's say there is an entity A, B, C. A is in, for the purpose of example, A is in Germany, B is in UAE, and C is in India. So if B is buying from Germany and selling it to India, or let's say there is another entity, China, which is again associated enterprises. So if B is buying from China and supplying to India, then income from the transactions where both the purchase and sale of goods is from A. So in this case, B would be having income from the associated enterprises, that is both purchase and sale is from or to its associated enterprises, and the income earned would qualify as a passive income. Interestingly, the word which is used is the sale of goods. So question comes whether sale of services or transactions, buying and selling of services will get covered under this criteria or not. So if this would have been in the law, one would have read it strictly and interpreted the term goods as goods. But this being guidelines, probably the interpretation can also be that goods include services, because the idea is to catch the the pass-through entities. Second type of income which is covered is income by way of royalty, dividend, capital gains, interest, or rental income. So these all passive income, need no discussion on this. However, there is general exemption provided to banking or public financial companies. The interest income earned by them would not qualify as a passive income. So in addition to passive income, the other criteria is less than 50% of total assets are situated in India. So in case you might have a foreign company may not have passive income, but if the assets in India are more than 50%, it will still become a passive company. So all these conditions, they need to be satisfied in one go. You cannot have if you're satisfying only one condition, or let's say all the conditions but not one condition, then also you will the foreign company will become a passive company. The next condition is less than 50% of total number of employees are situated in India or are resident in India. So it talks about employees, not your agents or the contract workers. So what if the employees are in India, wherein the employer-employee relationship is getting satisfied, they are situated in India or they are resident in India, then this criteria we need to check. Then another criteria is payroll expenses incurred on such employees less than 50%. So all these conditions, you might have let's say only one director, which is a resident, but salary paid to that director is equivalent or is more than 50% of the total salary, then you will get hit by this criteria. So all these criteria must be fully satisfied, and then only we will say you are an active company. The definitions of various things, income, passive income, value of asset data, that should be considered is given in the guidelines. We have only discussed the passive income. However, if you go to the guidelines issued yesterday, that is on 24th January, you will find the meaning of everything. Now, how this guidelines will apply on an active company? So in case of active company, it will be presumed that the place of effective management is outside India if the majority meetings of the board of directors of the company are held outside India. If the majority of meetings are of the company, a board of director is held outside India, in such case we'll say the PoEM is outside India. However, as discussed in the beginning, that what matters in this case is substance over form, and this very important principle. So in a case wherein though the meetings are held outside India, but the decisions are taken in India, then you will get hit, and it will create this PoEM risk. So merely following general and objective principles of global policy of the group laid down by the parent entity will not trigger PoEM. Very important thing. So in case there is some global policy which is applicable on all the group companies, and you have a foreign company which is following those global policy, it will not get covered. It will not get hit by the PoEM rule. However, if some policies are developed specifically for one company, now that may create a problem. So we need to remember it should be global policy. If you have 10 companies, you say that these are my global policy rules, for hiring, for firing, for accounting, for clearance of bill, for management, blah blah blah. But that should be the global. But if you have developed a policy specifically for one company, then if that company is following those guidelines, then it can very well create a PoEM risk. Now, in case you are not an active company, as we discussed earlier, and you qualify to be the passive company, in that case determination of place of effective management is a two-stage process, wherein the first stage what needs to be done is identification or ascertaining the person or persons who actually make the key management and commercial decisions for conduct of the company's business as a whole. And so the start would be who all persons, who all key management guys are involved in taking the company's decision as a whole, and then where those guys or those managerial person are located. So determination of place where these decisions are in fact being made is very important. So let's say you have a management which is the Indian management, but you keep on doing the meetings in the outside India, in Mauritius or in UAE, and you say, okay, I'm taking a decision, I'm a passive company, but I'm taking my decision all in UAE and Mauritius. Then it is very important to prove that actually you are taking those decisions outside India. So this determination of place where these decisions are in fact being made is very important, not where you are just writing those decisions. The question comes in substance where you are taking these decisions. The place where these management decisions are taken would be more important than the place where such decisions are implemented. However, let's say you are not able to identify PoEM, place of effective management, or the department feels in certain cases PoEM is not identifiable, then they can resort to place where main and substantial activity of the company is carried out. So it could, this bullet could actually hit the e-commerce companies. They are generally registered outside India and conducting business in India. So one could argue that you are a foreign company, but major of the transactions are happening in India. So one can say the substantial activity of the company is carried out in India. By substantial activity, it nowhere says substantial activity means turnover or sales. Substantial activity could also means the operations. So this bullets needs to be watched out. Then another thing is place where accounting records of the company are kept. So wherever you are keeping your accounting records, that place again is very important. But all these two bullets, come into the picture when, by following the general guidance, one is not able to decide PoEM, that is place of effective management. Instructions to AO, there are couple of instructions, but very important instructions to AO before they start determining whether the foreign company is having place of establishment in India or not. First is they need to take a prior approval of the principal commissioner or the commissioner, and it is mandatory before initiating proceedings. So it becomes very important or mandatory for them to take the prior approval of the principal commissioner or the commissioner before initiating the proceedings. Second is, once the AO is done with this analysis or report, or findings, the assessing officer needs to submit those findings to the collegium of 3 members, consisting of the principal commissioner or the commissioner, as the case may be, and then those collegium will call or give opportunity to the foreign company for being heard. Whether what do you feel, why we should not conclude that you do not have PoEM in India. So then this foreign company, can represent to the collegium and give the supporting documents. So what will happen if the PoEM is decided in India? If PoEM is to be held in India, a company not incorporated in India would be treated as tax resident of a company, and being a tax resident of a company, its global income would be taxable in India. It need to obtain PAN, TAN, maintain books of accounts and get them audited. It need to compute its taxable income as per as the Act and file its income tax return in India, and all of the provisions of the Act would be applicable, which are applicable on the Indian companies. So this was my brief presentation on the PoEM. There are a few very important things that we need to remember is, simply because you are a subsidiary company of an Indian company, you will not going to have PoEM in India. So one needs to follow the guidelines, at least the AO needs to follow the guidelines, see where the effective management decisions are taken. If they are taken in India, then only the subsidiary company will qualify to have PoEM in India. Also, in case of the step down subsidiaries, let's say you have a company in Mauritius and that Mauritius company further holds equity in different companies in Europe, and it was concluded that the Mauritian company is having a PoEM in India, it does not mean that other companies in Europe will also qualify to have PoEM in India. So we need to analyze each company separately. So with this, let me end my small presentation on PoEM. If you have any query, you can write to me on Gaurav at JGarg.com, JGarg.com, or you can call me. My mobile number is 9899994934. Thanks for watching the presentation. Keep liking us and share your feedback. Thank you.